All right, let's talk about one of the most painful, gut-wrenching experiences any investor can have: buying an asset at the absolute tippy top of the market. We're going to break down why this happens. And here's a hint: it has nothing to do with your spreadsheet. It's about a full-on psychological hijacking, driven by two of the most powerful emotions out there: euphoria and greed.
So just for a second, I want you to go there. Think about it. What was that one purchase? That stock? That crypto coin? That thing you bought right at its peak? Can you remember that feeling? That absolute certainty that it was a genius move? That it could only go up right before it all came crashing down? Yeah, we've all got one.
And this is the most important thing to understand today. That decision, it wasn't a failure of your analysis. You didn't misread a chart. What happened was your rational brain got shoved in a closet, and some very powerful, very old emotions that are hardwired into our DNA took the wheel.
So how exactly does this hijacking even work? Well, it all starts when you begin to understand the emotional landscape of the market itself.
See, the pros, they know that markets don't just move on numbers and data. They move on emotion. And the crazy part is these emotions follow a surprisingly predictable pattern. It's called the market emotion cycle.
So pretty much every single market cycle follows this path, right? It starts small, with just a little optimism. Then, as prices start to climb, that turns into a real thrill. And then, you hit the peak, euphoria. This is the top of the mountain. It's that moment where it seems like everyone is getting rich, the news is incredible, and it just feels completely unstoppable. And from there, well, you know the rest of the story. It slides into anxiety, then full-blown panic, and eventually, the long, slow climb back towards hope.
And here is the great paradox of investing. That moment of pure euphoria. The exact point where investing feels the absolute safest and success seems like a sure thing. That is actually the point of maximum financial risk. It's the moment when your logic has been completely and totally overwhelmed by emotion.
So, what is actually happening in our brains during that peak?
Well, it turns out our minds are falling one by one into a series of well-known and very powerful financial traps. It almost always starts with this one: FOMO, the fear of missing out. Look, when you see your friends, your neighbors, people on social media getting rich, it triggers a deep, primitive survival instinct. Your ancient lizard brain starts screaming, "Hey, you're being left behind. You have to get in on this, or you're going to be left out in the cold." And that FOMO, it feeds directly into the herd mentality. As humans, we are wired to find safety in numbers. If you see thousands of people running in one direction, your first instinct is not to stop and ask why, it's to run with them. In the market, this translates to assuming the crowd must know something you don't. We start to trust the herd more than our own judgment.
Okay, so now you really want to buy. And here's the crazy part. Your brain starts to actively help you make this bad decision. That's confirmation bias. You subconsciously start ignoring all the warning signs, the sky-high valuations, the cautionary articles, and instead, you only seek out the headlines, the videos, the posts that confirm what you already want to believe, that this thing is going to the moon.
And all of this leads to the final and most arrogant justification, the greater fool theory. This is the stage where you might even admit to yourself, okay, yeah, this is probably overvalued. But then you say, but it doesn't matter. I'm smart enough, I'm quick enough to ride this wave up and sell it to some other, greater fool before it all comes crashing down.
Now look, these biases aren't just some abstract theory. They have played out with devastating consequences time and time again throughout history. So let's look at a perfect case study to see them in action: the legendary dot-com bubble of the late 1990s.
I mean, the story was just intoxicating, right? The internet was going to change the entire world, so the old rules of investing, they didn't apply anymore. This created mass euphoria. I'm not exaggerating. People were literally quitting their jobs to become day traders. The herd mentality was so powerful that just adding .com to your company's name, even if you sold pet food, could make your stock price explode. And everybody was convinced they were the genius who was going to get out right before the music stopped. And we all know how that story ended. When the music finally stopped, the investors who bought at the absolute peak of that euphoria, they watched their investments plummet on average by a staggering 80 to 90%. That right there is the price of euphoria.
So, this all leads to the really important question, right? How do you protect yourself from your own brain? How do you stop yourself from getting swept up in the next wave of mania? Well, the good news is you can. You can build a defense system.
And your defense system really has 3 crucial parts. First, have a written plan. You have to define your rules for buying and selling before you're in the heat of the moment, before emotion takes over. Second, learn to be a contrarian. You need to train your brain to see widespread greed not as a green light, but as a giant red warning sign. And third, if you can, automate your investing. Things like dollar cost averaging are designed to take your emotional market timing fingers out of the equation entirely.
Warren Buffett summed up this contrarian idea perfectly. Be fearful when others are greedy, and greedy when others are fearful. This is the ultimate defense against the herd. It's like they say, when your taxi driver starts giving you stock tips, it's probably time to be fearful, not greedy.
So at the end of the day, just remember this. The goal is not to perfectly predict the market peak. Nobody can do that consistently. The real goal is to have a solid, robust strategy in place that allows you to stay calm and logical when everyone else around you is losing their minds in the chaos of greed and fear.
Which brings me to my final question for you. Right now, based on everything we just talked about, what is one single rule you are going to add to your investment plan to protect yourself from the next wave of market euphoria? Think about it, write it down, and make it real. Thanks for tuning in, and stay rational out there.